Good morning. My name is Tracie Race. I'm a CPA and partner with Moore Messina Webb, located in Roseville, California. Thank you for joining me today for our webinar entitled Social Security and When to Start Receiving Benefits. So many people assume that you have to begin receiving Social Security retirement benefits as soon as you retire and stop working, but that's just not the case. Retiring and claiming Social Security benefits are different. You have options, and learning about them can help you make a well-informed decision about when to start receiving those benefits. So as you approach retirement, when to claim your Social Security retirement benefit is one of the biggest financial decisions you need to make. Should you begin receiving benefits at full retirement age, which is 66 to 67, depending on your year of birth? Should you begin receiving a smaller benefit as early as 62, or should you wait until past full retirement age to receive a larger benefit? You can delay benefits until age 70. And as important as your decision is, there's no one-size-fits-all answer. It's a personal decision that must be made based on your unique circumstances. Of course, sometimes the answer is simple. You may need to start receiving Social Security benefits as early as possible if you need the income to meet day-to-day living expenses, perhaps because of an illness, disability, or unemployment. But if that's not the case, if you have other sources of retirement income, or you want to continue working, for example, you'll want to take the time to make a well-informed decision about your Social Security benefits. If you're like most people, you've paid into Social Security for years and you'd like to get the most out of that when you can. So to start, here are two major reasons why when you claim Social Security is so important. First, when you claim benefits can significantly affect your overall retirement income. With pensions disappearing, Social Security remains the major source of guaranteed lifetime retirement income for most Americans. And once you apply, your Social Security retirement benefit is locked in for the remainder of your life in most circumstances, not accounting for adjustments for annual inflation, of course. So taking the time to explore your options now can help you make sure you have enough retirement income later. Secondly, the timing of benefits can also affect your spouse, because he or she may be entitled to spousal retirement benefits or survivor benefits based on the amount you receive. There's a lot to consider as you make this decision. Here are some of the factors that this presentation will discuss: your full retirement age and how your benefit is calculated, the amount of your retirement benefit and the effect of taking that benefit early or late, how many years you can expect to spend in retirement based on life expectancy, whether you plan on continuing to work, your other retirement income sources, your income tax picture, and how that decision will affect your spouse and the benefits he or she can receive. So let's start with two basic things you need to know as you begin to explore your options. First, what is your full retirement age? It's the age at which you can receive a full, unreduced Social Security retirement benefit. Your full retirement age ranges from 66 to 67, depending on the year you were born, as shown on this chart. If you begin receiving benefits earlier than this age, you'll receive a reduced benefit. If you begin receiving benefits after this age, you'll receive a higher benefit because you will have earned delayed retirement credits. Other benefits that you or your family members can receive are also based on what you're eligible to receive at your full retirement age. The second thing you want to understand is how your full retirement benefit is calculated. The benefit calculation is complicated and beyond the scope of this presentation, but here is a brief overview. Your Social Security retirement benefit is based on the number of years you've been working and your earnings over those years. To qualify for Social Security retirement benefits, you must have worked at least 10 years in the Social Security covered employment. When you become eligible for benefits at age 62, the Social Security Administration, or SSA, calculates your full retirement benefit. Your highest 35-year of earnings are indexed and adjusted for inflation. Then they're averaged. Finally, a formula is applied to determine what's called your full retirement benefit. You may also hear your full retirement benefit referred to as your basic benefit or your primary insurance amount. If you retire at full retirement age, you'll receive 100% of this amount. But if you begin receiving your retirement benefit earlier, your benefit will be reduced by a certain percentage for each month you are receiving benefits early. So let's take a closer look at how much you'll receive if you want to start receiving benefits earlier than your full retirement age. Currently, the earliest age you can receive a Social Security retirement benefit is 62. But choosing to claim benefits early have financial consequences because it will permanently reduce the amount you'll receive. Your benefit is reduced by a certain percentage for each month you receive benefits early. If your full retirement age is 66, that equates to a 25% benefit reduction at age 62. If your full retirement age is 67, that equates to a 30% reduction. So here's an example. Let's say your retirement age is 67 and you decide to apply for benefits at 62. Your benefit will be 30% less than it would be at age 67. As this chart shows, a $2,000 monthly benefit taken at age 67 would be reduced by 30% to $1,400 if taken at age 62 instead. However, you'll receive this reduced benefit for a longer period of time than if you began receiving benefits at your full retirement age. And that certainly is a big factor. This will be discussed later, but first, let's look at how your benefit will be affected if you decide to delay retirement instead. If you delay receiving Social Security benefits, you'll receive delayed retirement credits that will permanently increase your benefit. Your benefit will increase for each month you delay receiving benefits, or 8% per year past your full retirement age, up until age 70. Note that we're only talking about benefits based on your own earnings record. You won't receive delayed retirement credits for survivor benefits or spousal benefits. To continue with this hypothetical example from the previous slide, if your full retirement age is 67 and you decide to delay taking retirement benefits until age 70, your benefit at age 70 will be 24% more than at age 67. As this chart shows, a $2,000 monthly benefit taken at age 67 would be worth $2,480 if taken at age 70 instead of age 67. This final chart shows the range of monthly benefits you might receive depending on when you choose to begin receiving benefits. In our hypothetical example, if $2,000 is the full retirement benefit at age 67, the monthly benefit of $2,480 at age 70 is approximately 77% more than the monthly benefit you'd receive of $1,400 taken at age 62. That's a big increase. However, what this chart doesn't show is that you'll be receiving benefits for 8 years longer if you claim them at age 62 rather than age 70, and that can add up to a lot of money. In this example, if you receive $1,400 for 8 years, you would receive $134,400 by age 70, not including any cost of living adjustments. So we return to the fundamental question. Is it better to opt for a smaller benefit at age 62, but receive it for a longer period of time? Or is it better to claim at age 70 to receive a higher monthly benefit as possible? Again, there's no size-fits-all answer. In part, it depends on how long you can afford to delay receiving benefits and how long you can expect your retirement to last. So how long will retirement last? There's no way to know for sure, but retirement may last longer than you think. According to the SSA, about 1 in 3 65-year-olds alive today will reach age 90, and 1 in 7 living until age 95. You may even want to plan for maximum lifespan to reduce the risk that you'll live longer than you expect and simply run out of money. For example, if you wait a few years to claim benefits, you'll receive a higher monthly benefit for life. And remember, because you'll receive annual cost of living adjustments as prices rise, your benefit will generally keep pace with inflation, unlike most other sources of retirement income. Now, if you're married, you'll need to consider your joint life expectancies of you and your spouse, which will often differ from your individual life expectancy. Next question you need to consider If you're thinking about working well into your 60s and 70s to increase your retirement savings, you may be wondering whether you can receive your Social Security benefits while you continue to work. The answer is yes. Many people choose to apply for Social Security benefits before they actually retire. But as you may have heard, earnings from work while you're collecting Social Security benefit under full retirement age might be reduced and have tax implications. If you're under full retirement age and your earnings exceed a certain amount, called the annual earnings limit, part of your benefits will be withheld, reducing the amount you receive from Social Security while you're working. But once you reach full retirement age, you can work and collect full Social Security benefits. Earnings from a job won't affect your benefit at all. So let me say that another way. If you're still working and you have not reached full retirement age, then the earnings you're earning while you're working will affect your benefit. But you can collect Social Security at full retirement age and receive full benefits. If you're under full retirement age, the rule is that $1 in benefits will be withheld for every $2 you earn over that annual earnings limit. This limit generally changes every year. It's indexed for inflation. In 2022, that limit was $19,560. In the year you reach full retirement age, a special rule applies. $1 in benefits will be withheld for every $3 you earn over the annual earnings limit. In 2022, that limit is $51,960. As mentioned earlier, at or after full retirement age, earnings will not affect your benefit. However, let's clear up a common misconception. You're not actually losing your benefits because you choose to work, so you don't need to try to limit your earnings. If some of your benefits are withheld, you'll receive a higher monthly benefit at full retirement age because the Social Security Administration will recalculate your benefit every year and give you credit for any of those earnings that were withheld. So the effect working will have on your benefits is only temporary, and any additional earnings you may have actually increase your benefit later. The SSA website has a tool called the Retirement Earnings Test Calculator that you can use to see how your earnings before retirement might affect your benefit. One of the most important factors to consider as you decide when the benefit of receiving Social Security and how your decision will affect your overall retirement income plan. Most people have several sources of retirement income, including Social Security benefits, income from savings and investments, earnings from a job, and pension benefits. How much retirement income do you need, and how much does Social Security fit into that plan? If you have less than adequate retirement savings or no pension, you may need to rely more heavily on Social Security income, leading you to claim benefits earlier if you need retirement income as soon as possible, or conversely, encouraging you to postpone claiming benefits so you can earn the highest benefit possible. But if you've been able to accumulate substantial retirement assets, you may have more flexibility when it comes to the timing of your Social Security benefits. For example, it's possible that claiming your Social Security benefits sooner rather than later will allow you to delay withdrawing funds from your tax advantage investments, such as your 401k, 403b, or traditional IRAs, allowing them to accumulate tax deferred for a bit longer. Alternatively, tapping other retirement assets first may allow you to postpone claiming Social Security benefits, therefore allowing you to accrue delayed retirement credits. Taxes may also be a consideration depending on what income you have in addition to your Social Security benefit. Now, taxes aren't going to be a big concern for everyone. If you have little to no income other than Social Security, then it's likely your Social Security income won't be taxable. However, if you have income from other sources, let me go back one slide. If you have income from sources other than Social Security, you may end up having to pay federal income tax on your benefits. As shown on this chart, 50 to 85% of your Social Security benefit may be taxable depending on your combined income from Social Security and your other sources of taxable income and your tax filing status. So for example, let's say you're single, you collect a Social Security benefit of $20,000 a year, and you have earnings from a job of $35,000. Up to 85% of your Social Security benefit may be taxable because your adjusted gross income, or AGI, plus half of your Social Security income is greater than $34,000 a year. The important point to remember is that when you're making your decision about when to receive your Social Security benefit, federal and in some cases state income taxes may be a consideration if you have substantial taxable income, such as earned income, taxable pension income, or investment income. I should note, currently California and Arizona do not tax Social Security benefits. Utah provides a credit for taxable Social Security benefits. All right, how will your decision affect your spouse? So if you're married, there's another important question you'll need to ask before you decide when to claim your benefits. How will my decision affect my spouse? That's because when you begin receiving your retirement benefit can dramatically affect your spouse's benefit during retirement and thus your household income. Your decision can also affect any survivor benefit your spouse may be entitled to, and your spouse has decisions to make too. Together, you'll need to consider what is the most appropriate combination of claiming ages is based on your ages, based on your earnings, and based on your life expectancies. When you're married and both you and your spouse have worked in jobs covered by Social Security, each of you may be entitled to retirement benefits based on your own earnings records. As you recall, at your full retirement age, you're entitled to receive 100% of your full retirement benefit, and you can receive reduced benefits as early as 62. You and your spouse may also be entitled to spousal benefits. For example, if your spouse has low lifetime earnings, he or she may be entitled to a spousal benefit based on your earnings record that's larger than a retirement benefit based on their own earnings record. At your spouse's full retirement age, their spousal benefit will generally equal 50% of your full retirement benefit. However, that amount will be reduced if your spouse files early. For example, if your spouse's full retirement age is 67 and he or she files at 62, then your spouse will receive only 35% of your full retirement benefit. This reduction is permanent, so it's important to carefully consider the implications of filing early. And keep in mind that your spouse can't collect spousal benefits until you have filed for your own retirement benefit. Let's talk about survivor benefits. So in addition to retirement benefits and spousal benefits, married couples may consider survivor's benefits. When you claim your Social Security benefit can greatly affect the amount of income available to your spouse should you die, because your surviving spouse will generally receive the benefit that you were receiving at the time of your death, unless your spouse is already receiving a higher benefit based on their own earnings record. If your spouse's life expectancy is much greater than yours, this can be an especially important consideration. Survivor benefits may be payable as early as age 60. However, a benefit reduction will apply if your surviving spouse begins collecting a survivor benefit between age 60 and his or her full retirement age. Here's a hypothetical example to illustrate why it's important for spouses to carefully choose when to begin receiving Social Security retirement benefits. In this example, both spouses are able to claim benefits based on their own earnings records. Spousal benefits are not considered here. As this table shows, if both spouses choose to claim benefits at age 62, their joint monthly income will be $3,077. But if both spouses wait until age 70, their joint monthly income will increase to $5,451, a difference of $2,374 a month. That's over $28,000 a year. In addition to by waiting longer to claim retirement benefits, spouse one may also substantially increase spouse two's monthly survivor benefit, since Social Security generally pays the surviving spouse the larger of his or own retirement benefit or the benefit his or her spouse had been receiving. Of course, this illustration does not account for other factors that this hypothetical couple might need to consider, and your own situation and overall income plan will be unique. The choice is yours. This presentation has explored some of the major questions that you'll want to consider as you decide when to begin receiving Social Security benefits. To recap, here are some of the reasons you may decide to claim benefits early, as well as some of the reasons you might decide to claim benefits later. Remember, the choice is really yours. It's up to you based on your own unique circumstances. Retirement can be an exciting time, but it comes with financial challenges. When you're ready to make decisions about your Social Security benefits, take some time to explore your options. Your CPA and financial planner are good resources you should use to help make this decision. Both myself and Gina Mitchell, for the financial planner that I'm partnering with here on this presentation, are available to meet with you to answer any of your questions. I'll provide our contact information at the end of this presentation. If you haven't already done so, I urge you to go to the Social Security website, where you have a couple of relatively easy ways to estimate your retirement benefits you might receive. First, you can sign up to access your Social Security statement online so that you can review a summary of your actual earnings records and an estimate of your retirement benefits based on up to 9 different claiming ages, including age 62, full retirement age, and age 70. If you're already age 60, you also have the option of receiving this statement in the mail every year, about 3 months before your birthday. The second way to estimate your Social Security benefit is to use the SSA's retirement estimator, which is available on the website. This calculator allows you to input various scenarios based on current law to estimate your future benefits. As you get near age 62, you should also contact the SSA to discuss your options. Representatives aren't allowed to help you or give you advice about when to start taking benefits, but they are happy to explain your options and the rules that apply. When it comes time to apply for benefits, you can do that online, by phone, or in person at the SSA's local offices. Wanted to thank you for attending today's presentation. And remember, small steps can enhance your financial life one day at a time. We welcome questions. I've listed our contact emails and phone numbers should you have any. I thank you for joining me today for this presentation, and I look forward to hearing from you soon.